Stephen Ehrlich, who's the founder and CEO of Voyager Digital. He joins us now to discuss markets and other things. Welcome, Stephen.
Oh, thanks for having me.
So what's your take? How do you, what's this September pattern? Is there anything to that? Is there likely to be a different trend this year? Is it just pure coincidence?
I think it's more coincidence than anything else. I think that we're looking at it and expecting an uptrend here in September, and then leading on to the end of the year. So I think that those the 4 months leading into it that were all positive. I think you're going to see that positive coming again this year in September.
So I want to dig more into the outlook for the markets in a moment, but let's just talk about you guys for the time being. I mean, you've had very recent announcement of this large merger executed through a token swap. Can you tell us more about that? It sounds kind of complicated, and give us a sense of what the mechanics are as part of this deal. Congratulations, by the way.
Oh, thank you so much. Look, we announced an acquisition on the equity front of a French, a Paris entity called LGO about 9 months ago. And as part of that, we did a real big token merger where their token holders get to merge with the Voyager token holders. So we wind up with a new Voyager token. But this is all based upon our theory that rewards programs are all going to be on the blockchain in the future. And by putting the two tokens together, we're building the world's biggest rewards program on the blockchain. And because we think that, like I said, everything is going to be rewards based on the blockchain in the future, whether it's airline miles, whether it's hotel mile points, whether it's coffee shop points. People want to be able to hold them, and the blockchain is the perfect place for this. So putting these two together, we've created tremendous community, because crypto is all about community. And we gave people reasons to use our platform and come back and engage with the Voyager brand.
Right. I also wonder if anything interesting about it, was the idea that in this merger, unlike a traditional merger where there's obviously a share swap, the core element of it was not only, I suppose, the swapping of what is a different form of equity, the tokens that are held here, but also the functionality of that. Like, you had to work on some new smart contract structure, and you've got to figure out how the staking works in that. Quite different than just a simple regular equity exchange, it would seem.
No, definitely much more complex. And that's why we broke it into two parts. We broke it into the equity part, where we acquired a regulated entity in Europe so we can begin taking our services and the Voyager app into the European marketplace in the future here. But at the same time, building a new app with our partners at Republic, who was a great partner for us, Republic.co, in building this new version of the app to bring a whole new level of rewards and loyalty to the crypto business. So we actually did break it into two parts to actually make this work and give consumers that community that really drives crypto.
And you bought Coinify a month ago. Was this part of that strategy as well?
That just expands upon the strategy, because to be able to build a crypto agency broker on a global basis, you need to bring people back into the fiat, off the fiat ramps into the crypto world. So by acquiring Coinify, we're now able to bring people from the traditional markets into crypto.
Okay, sounds good. So let's just take a look at the markets. It's interesting. People have been talking a lot in the last few days, at least, and some of the guests we've had on other shows, about this sort of, growing interest in some of the bigger altcoins, particularly the ones that are involved in sort of DeFi. So Ethereum, of course, has had a very good run in the last couple of days. Solana has been this huge performer. This is the All About Bitcoin show, right? So I want to see, looking at that, what does that tell us about how Bitcoin is perceived in the market right now? Is it still the thing that you got to own, or is it starting to lose favor to these other players?
What's interesting, what we see on our platform, on the Voyager platform, is still people accumulating Bitcoin, because it will replace gold over time. I don't think there's any doubt about that. I think it's growing in that nature. And I think more and more people want to hold it. I'm not sure that they want to spend it, or they're going to use it to buy, NFTs. And I think that's where the Ethereum, the Solana, the Avalanche, the Algorand, those protocols are going to be used for the other pieces of the digital industry. But Bitcoin's still the king, and it's still going to be the one that people hold as their reserve currency. And really, when you think about it, the choice of holding a brick of gold or the idea of holding Bitcoin in your wallet or on an exchange is much, I'd rather have that Bitcoin. And I think we're not going to see that go away. That's only going to continue to increase. Like, we have a price target. I have a price target of Bitcoin being over $100,000 by the end of this calendar year. So I think we're seeing that accumulation continue on our platform.
Okay. But what about institutions who, clearly they were a driver of the run up in the price earlier in this year, maybe a pullback, some concerns about regulatory scenarios and environmental concerns and the like. And then the summer being a quieter period, there's some talk about them coming back, maybe as we move back into sort of the rhythm of things on Wall Street. But are they taking any interest in these alternative tokens at this stage, or are those largely still a Bitcoin story for these sort of more traditional non-crypto investor institutions?
Yeah, we're seeing institutions, and we get plenty of inbound calls from, and we don't have an active outbound institutional business. We take a lot of inbound calls there. We're seeing institutions come in wanting to buy Bitcoin, wanting to buy the other top, protocols in Cardano, in Avalanche, Algorand. Those are protocols that bigger institutions are coming to us and saying, how do I buy more? How do I start holding on that? Because there is this belief that, this ecosystem is still real early, maybe in the second inning of a game, and we've got a long way to go. And we're seeing that adoption. I think it's actually expediting at this point from what we're seeing on our platform and the calls we're getting inbound.
And what's the conversation that you have when you talk about that from a portfolio management perspective? Like, are they looking at, it sounds like it's a completely different proposition, right? They would be interested in Bitcoin as a digital gold play, and that's part of their sort of conservative hedging strategy, if you like, looking at, the risk profile of the macro environment. But then these bets would be, I presume, more of a strategic kind of investment in all of the development that's going to go on in this space. Does that capture kind of the way that they're talking about this portfolio-wise?
That's exactly right. They're looking at some of the protocols and trying to make decisions on which protocols are going to be the most most used down the line, whether it is for NFTs or it's used for DeFi or it's used for other projects. That's what the institutions are looking at and saying, okay, which ones can I actually purchase and hold, because they are going to be the ones that change the way we do business. And that's why I think it's intriguing for us in seeing that and seeing the institutions ask those questions. There's great research that we work with them on and providing, guys like, I think you mentioned earlier, Fundstrat do a great job in getting some research out on the different protocols. And more institutions are starting to use that research to make these investment decisions. So you're seeing a lot of the traditional markets enter the crypto markets and the analysis being done by those fund managers.
So what are you seeing in terms of the makeup of your own user base as it grows? Like, clearly growing, and also perhaps the regional makeup of that.
Yeah, we're strictly in the US today, but we're seeing, new accounts coming on our platform every single day, net new accounts every day, net new deposits on the platform every day. And then what we're seeing is this, variety of coins that people are buying, whether it's, we're seeing a lot of additions on the, Matic, Cardano, Shiba, the Shiba coin that we offer, a lot of people are actually buying that too. So we're seeing this US customer gravitate
not institutions,
to various
though, to be
coins.
clear, the Shiba, I would guess this is retail investors, right?
The Shiba is retail. Yeah. So on our platform, mainly, again, we service actively, we have almost 2 million users on our platform. And so we have a lot of retail users that really drive a lot of what we're trying to do. And the institutions come in and they tend to buy and hold. Our active traders on the platform are buying multiple of coins in addition to holding.
Okay. Look, Gary Gensler, the SEC chairman, has been making some news these last couple of weeks, and we had him out there yesterday making a couple of fairly strong, some might say somewhat aggressive statements about how regulation is coming. He's talking about the need to bring the industry under a regulatory framework, and how that ultimately is the benefit of the technology if it can do so. But in some respects, indicating that players in this space, and he's singled out exchanges, have been a little bit sort of too naive and aggressive in their approach, he's saying they really need to be asking for permission, not for forgiveness. What's your response to that, and how do you see yourselves fitting? Do you feel like you're, for US only, presumably you've really thought hard about your compliance?
Yeah, I think compliance is, one of the top things, if not the top thing that we actually think about every single day. And what we thought about when building the business, where, the core of our team are ex-broker dealer. I spent 26 years in the broker dealer world. So I understand compliance and regulation. And I think that there are a couple of players here, ourselves, and there's another big player that's a public company, Coinbase. And I think we look for extra regulation. We're public companies. So when you ran that piece about Binance US trying to, go public over the next 3 years, we've already done that. Coinbase and Voyager already have gone public because we now get all that extra scrutiny. Our financials are public, the transparency of being a public company. Now, when it comes to some of the things Commissioner Gensler has said about tokens and so forth, I think we do need a better regulatory infrastructure related to that. But when you start digging into that infrastructure, the broker-dealer infrastructure that FINRA has been for years is really deep when you think about net capital rules, Series 7 tests, SIPC, and all those things have to be thought through when you think about digital assets and where they fit into the regulatory infrastructure. It's not a one-size-fits-all that we can pick digital assets up and put it into that existing infrastructure. There's not even one question on the Series 7 test today that talks about digital assets. So how is it going to be picked up and put in there? I think there's a lot of work to be done. I think there are a lot of companies that want to help drive that, including us, how we could bring a fully regulated infrastructure to the market, because it's in everybody's best interest to do that, but it's got to be thoughtful.